Oh, good morning, everyone. 5 minutes past 9 on day 3 of our conference. And who's first timer today? Or have you been? Is anyone first time today? Welcome. Hello. My name is Christina Morrissey. So I've been here like everyone else except yourselves for the last few days. There are still some chocolate bars left outside if you're collecting goodies as you walk around. I was speaking to the guys at the ABC refinery. Has everyone got one of these yet? Yeah. Who's got 2 of these? Who's got 3? Put your hand up. I was speaking to the lady at the booth today, and she said, people keep coming up to me each day and they say, what's that you've got there? Oh, is that a chocolate bar? She said, yes, it's the same one that you got yesterday. She's got like a photographic memory. She remembers you all. But she said, look, she's given out 1,000 chocolate bars so far. She's got 2 boxes left. So if you're in there early this morning, you may well pick up yourself a little gold chocolate bar to take home. Now, at this point in time, we should be talking to the Deputy Premier of New South Wales. Now, you all know Stewie and Jackson, who are organisers of this particular conference. Last night, it took them over an hour to walk 8 kilometres back from Circular Quay, is it? Circular Quay that you have here? So from there back to here, because there were all road closures and bits and pieces, and they said it was just a bit of a nightmare. So we're thinking that maybe the Deputy Premier has fallen foul to roadworks outside. He did say he was on his way. So we're going to push on with the program. And when he arrives, we will leap into action. We will wait for our fabulous speaker, explorer who's on stage, to finish their speech, and then we will allow him to come up and address you. But he has got a speech especially prepared for us today. That's Paul Toole. Who of you walked up the front stairs this morning? No? So for those of you who are playing along at home this morning, we have some protesters downstairs here at the Hyatt. Now, there is an ANZ conference on at the Hyatt as well at the moment. So I thought surely they'll be protesting, interest rates or Visa card interest rates or bank fees or something, but apparently they've misread our program. They've failed to acknowledge that we are actually looking for cleaner, greener energy and cleaner and greener ways of extracting that energy, and they want to protest it. So I think that's enough said about them. They obviously haven't read the program. We're not going to be able to help them with any other form of persuasion. Right. Tim Davidson, how are you feeling, sir? Fabulous. Well, okay, let's welcome this fellow up here. Babyface Tim Davidson, he's sometimes known by people around, but do not let that appearance of youth fool you, because this man certainly is full bottle, and some of you are having a bit of a chuckle down the back here. This man has been around for a while. He just holds his age very, very well. So it's Meeka Gold he's up here presenting on behalf of, and Meeka is a company that is being noted as one of the savvy gold explorers, and there's a fair bit of sizzle about their presentation here today for all of you to take up. I'm sure, Tim, you'll be addressing your recent results from Circle Valley, that drilling program there. You may even touch on that 1.1 million ounce at Murchison, the acquisition there. You've got a lot, you've got 15 minutes. So would you please make him very welcome, our first speaker for day 3 of the #1 conference here on the East Coast.
Thanks very much, Christina, and thanks to Stu and the team for another fantastic event. It's really been jam-packed, and we're very excited to be here and to share the Meeka Gold story, which, as Christina alluded to, revolves around our very large resource base in the Murchison and some very exciting exploration results down in southern WA at Circle Valley. Now, a quick corporate overview: a reasonably tight register. The top 20 hold 38% of the register, and importantly, board and management have got skin in the game. We hold 10% of the business, so we're well aligned with the rest of the shareholder group in that what we want is to grow the value of the business. In terms of our capital structure, we closed yesterday at 4.8 cents, 920 million shares on issue, gives us a market cap in the order of $44 million. We ended last quarter with $5.1 million in the bank, and that leaves us with an EV of around $39 million. You can see the share price chart there on the bottom of the slide. It's been reasonably stable over the last 6 to 12 months, and with the aggressive exploration that we're conducting both in the Albany Fraser and soon to be in the Murchison, we expect to move that share price north. Now, what underpins the value of our business? we've got a very large high-grade mineral resource in the Murchison, 1.1 million ounces, and we intend to grow that resource over the next 12 to 18 months with an aggressive drilling campaign. We've recently received and released some very exciting results that are very much complementary to the gold in the Murchison from our Circle Valley project in the Albany Fraser, very a greenfields exploration project, but we're very encouraged by both the air core results that have defined a number of regolith gold anomalies and some deeper drilling that we released on Tuesday that outlined some broad zones of high-grade mineralization in the fresh rock. And I'll talk a little bit more about that later in the presentation. In addition to the gold, we've got an emerging rare earth exploration story. Now the company acknowledges this is a very early stage opportunity, but it's something that we're doing on the back of the exploration work, or we identified on the back of the exploration work we did looking for gold, and it's something we need to understand the value or the potential value of, but certainly something we're excited by, and that's down in the Albany Fraser. So the Murchison Gold Project, this is our cornerstone asset, 1.1 million ounces in the Murchison, and we took the first step to outline our plans to monetize that resource base. Late last year, we released a scoping study that outlined a 440,000 ounce production plan, approximately 50,000 ounces a year for 8 years. It delivers over the life of the project in the order of $180 million of free cash. So when you compare our $40 million market cap to the potential cash flow that this project generates, it was a very appealing, it's a very robust project and a very exciting opportunity for the company to pursue. Now, that was the first step as we move to put this asset back into production. The key focus for the team now is to grow that resource base, grow that 1.1 million ounces, and make that development opportunity a much more appealing opportunity. And the key target space for us in terms of growing that resource is, or the key search space, I should say, is the greenstone belt that hosts the Turnberry deposit. Now, that portion of the resource, 610,000 ounces, demonstrates that greenstone belt is a fertile search space. It's a very large shear zone, and that's where we intend to commence drilling in the next few weeks. Now, 5.5 kilometres, we've demonstrated that it's fertile for gold. As I mentioned, Turnberry, 610,000 ounces in resource. Outside of that Turnberry deposit, it's only really had a light amount of drilling, broad-spaced reconnaissance style air core drilling. And what we've demonstrated with that drilling is that there's mineralization outside of that resource. You can see the results there from St. Anne's. These are results that we released earlier this year. Very broad zones of strong mineralization, and that mineralization, or those intercepts, are very similar to the intercepts from Turnberry in the early stages of drilling out that Turnberry deposit. So we're very encouraged by those results. It's shallow mineralization, and at present, St. Anne's does not have a mineral resource attached to it. So that's a very exciting opportunity for the business in terms of an opportunity to grow that resource, and that's where we'll be focused on initially. Now, you can see from the slide there, what we're trying to show there is the amount of drilling that's been completed within that 1.5 kilometre strike zone that hosts the Turnberry deposit, over 70,000 metres, and we've defined 610,000 ounces. To the south of Turnberry, we've drilled in the order of 20,000 metres. We can see that there's very strong mineralisation, very fertile shear zone, but it hasn't had the quantity of drilling required to define that mineralisation to put it into a resource classification. So the intent for us moving forward is to go and follow up those very good results that we're seeing there at St. Anne's, infill in and around those. The mineralisation remains open to the north at strike and at depth, infill and around those with a view to put a resource around it, and then close the gap between Turnberry and St. Anne's. And we've got a strong view that there's a big mineralised system there. It's a very large opportunity for us to grow the resource. Now, outside of the Murchison, and this is where we're currently exploring at the moment, we're drilling at Circle Valley. We see the Albany Fraser province. It's an emerging mineral province. It's starting to get a lot more prominence, and it's a vastly underexplored terrain. We're demonstrating that it's a very exciting search space for gold, and it's starting to get more prominence in the rare earth space with a number of companies conducting exploration specifically targeting and focused on rare earths. The rare earths opportunity for us is something that we're looking at on the back of work we've already done for gold. And in that regard, the gold, particularly at Circle Valley, we've defined 4 very large gold and regolith anomalies. We've followed up and drilled some deeper holes underneath the first of those gold and regolith anomalies, and we've got some very strong primary gold mineralization in the fresh rock. And you can see, that intercept there, 23 meters at 5 grams, comes from the very first hole that we drilled, a deeper RC hole that we drilled at Circle Valley. So very exciting outcome. And on the back of that work, the regional air core work, we reanalyzed those air core samples. And what we're seeing on the tenure is that ground is blanketed by a very thick layer of saprolitic clays, up to in excess of 50 meters in thickness in areas. And within that saprolitic clay horizon, we're seeing large accumulations of very high grade clay type, lateritic type rare earth mineralization. So we acknowledge it's early stages, but it's something that has the potential to deliver significant value for the business, given the government focus on moving towards more renewable energy sources, and then obviously the technologies that require these metals. Now, Circle Valley, since January, we've drilled in the order of 18,000 meters of air core and RC drilling. We've defined a number of very large gold and regolith anomalies. These anomalies sit coincident with magnetic features. We've drilled what we think is a cross strike of these anomalies, very large, 350 meters to over 700 meters in places. So very broad zones of anomalism. I mentioned we followed that up with some deeper RC drilling starting in January of this year. Again, you can see the intercepts on the slide there. Broad zones of higher grade mineralization in the fresh rock below that regolith anomaly. So that's very exciting, very encouraging. That's the first of the targets that we've tested, or the first of the anomalies that we've tested. So it's great to get those results. Now, the mineralization, it's a very broad zone of lower grade mineralization, up to 85 meters of thickness, 0.1 to 0.3 grams. And within that lower grade mineralization, we're getting lenses or pods of much higher grade mineralization. We've defined that zone of mineralization in the fresh rock over 1 kilometer now, and that remains open in all directions, but we believe that it strikes roughly east-west. And very excited by the results that we're getting from the RC drilling. Now, this is demonstrating some of the primary mineralization in the fresh rock. This is from 120 meters, or this intercept is from 120 meters downhole. You can see that there's very strong grades. It's hosted in the gneisses. It's interpreted to be shear controlled and associated with biotite and pyrite within that shearing. You can see the slight pink coloration in that higher grade portion of the chip tray. That's associated with potassium feldspar. So very, very strong mineralization at depth within that much broader zone of lower grade mineralization. Now, the reason that the team is getting so excited by it is that we're starting to see a lot of similarities between the mineralization at Circle Valley and what was observed at Tropicana early on in the exploration stages there. Now, we're sitting in the same orogenic belt. We're in that Albany-Fraser mobile belt, so we're in the same geology. The mineralization's hosted in the gneisses. We're seeing a very large gold in soil anomaly at surface. So at Anomaly A, we've got a 1.2 kilometer by 400 meter zone of gold anomalism at surface. Tropicana was a very large surface gold anomalism, followed up by some deeper RC drilling that intersected the primary mineralization. We're following up our gold anomalism with this deeper RC drilling at the moment, and we're starting to intersect that deeper primary high-grade mineralization within a much larger package of lower-grade mineralization. So similarities there in terms of geometries. The trace elements that we're seeing at Circle Valley, again, very encouraging, is that they align very well with what was observed at Tropicana. So very high levels of silver, rubidium, barium, molybdenum. And this is something that we're very excited by, not only the width of mineralization, but also the style of mineralization and the fact that it aligns so well with Tropicana. And you can see the size of the prize there, the Tropicana resource. That's, stands at nearly 5 million ounces, and that's after a significant amount of mining depletion. So very big opportunity the company's pursuing, and we're certainly excited by what we see. Now, on the back of the regional air core work that we've done at Circle Valley, we identified the very thick saprolitic clay layer, and within that saprolitic clay layer, we've analysed some of those air core samples, and they're returning very thick or broad zones of high-grade clay-type rare earth accumulations. Now, we've drilled in the order of 17,000 metres of air core drilling across that tenure, so a very large area. We've got results for 1,200 metres of that air core drilling. We expect to receive the results from the remaining 16,000 metres over the next 2 to 3 months, and we're very excited by what we see in the results to date. On the back of the results we see at Circle Valley in the rare earth space, and given our presence in that region, we went and secured a very large tract of land with previous exploration results that highlight the potential for rare earth mineralization. This project, Cascade, sits 50 kilometres southwest of Circle Valley. Shallow auger drilling identifies areas up to 630 ppm at surface of total rare earth oxide mineralization, and end of hole samples from previous air core drilling have identified up to 2,500 ppm of rare earth mineralization in the clays. Now, the lithology logs from that drilling again highlight the fact that there's a very thick layer or blanket of saprolitic clays that host that rare earth mineralization. Very encouraging. We've actually managed to secure the samples from that air core drilling. They were in an exploration yard in Ravensthorpe. We've collected those, dropped them off at the laboratory in Perth, and we expect to get the results from that, the assay results, rare earth assay results from that drilling in the next 2 to 3 weeks, and that will define for us, the potential that we see at this Cascade project. But it's certainly looking very encouraging. Now, in terms of our forward work plan for the next 6 to 12 months, we're currently drilling at Circle Valley. That will be results driven. The intention was to finish up early next month. If we continue to see the exciting broad zones of mineralization there at Circle Valley, we'll continue that drill program, move to the Murchison, drill out that St. Anne's to Turnberry shear zone, go back down to the Albany Fraser and pursue that rare earth opportunity in the second half of the year. And if I can leave you with 3 key takeaways, it's that the value of the business is largely underpinned by that 1.1 million ounce mineral resource that we're looking to grow in the Murchison. We've got very exciting exploration upside in Circle Valley in the Albany Fraser, and certainly resource growth opportunity in the Murchison. And we acknowledge an early stage opportunity in the rare earth space, but something that certainly has potential to be of significant value, and is certainly getting us excited. So thanks very much for your time, and we're at booth 35 if you'd like to come up and get some more information.
Thanks, Jim. And thanks, Meeka, for opening our third day of the conference here in Sydney. Now, back in November, last year, November 2021, New South Wales Deputy Premier Paul Toole launched the New South Wales Critical Minerals Strategy. And the aim of that, of course, was to make this state the #1 mining investment and advanced manufacturing destination. He's managed to extricate himself from that traffic snarl that is outside to join us for RIU Sydney Resources Roundup. Would you please make him very welcome as he makes his way to the front of the stage here today. I should have given you more of a speech as you were coming up the front there, Mr. Toole.
Well, good morning, everyone. And firstly, can I just say thank you for the invitation this morning to be here and to actually speak about some of the initiatives and some of the exciting things that are happening right here in New South Wales. Can I just thank you as well for the very warm welcome from the crew that I had outside the roundup as well. Thank you for the entertainment that I was able to see as I walked in. But I do want to point out that now, whilst I have become the Deputy Premier and also now the Minister responsible for mining, I'm also very fortunate that I come from an area in the Central West that actually has coal mining activities taking place within that area. And that also shows the significance of the importance of jobs, the importance of the economy, but also about the future of those areas. And in the short time that I have been the Minister, there have been some very exciting initiatives that we are launching and have launched already in New South Wales. And I am very determined to ensure, as has been said, that New South Wales is the #1 state when it comes to investment in mining and advanced manufacturing. And today I want to highlight and share some of those initiatives with all of you here today. We've also said that exploration and the mining sector is critical to the success of the New South Wales economy. And when we have a look at it, it actually contributes billions of dollars in economic activity. There are tens of thousands of jobs that are associated with it, and it's the lifeblood of many regional communities. And when the mining and mineral sector is doing well, so is the economy here in New South Wales. And that's why the New South Wales government is fully committed to the sector and driving new investment into exciting emerging industries like critical minerals and supporting our existing sectors. We have an exploration boom right here in New South Wales, which is testament to the considerable untapped potential within our state. Now, we anticipate that this will translate to significant growth in the metals mining sector. Coal prices are at an all-time high, and New South Wales will continue to supply our trademark high-quality coal while there continues to be demand for it. Today, I'm also going to share with you our plan to drive critical minerals investment in a stronger future for New South Wales and the opportunities that can be afforded to us right here in this state. It's no secret that investments across the world in defence, in aerospace, in renewable energy, and other technologies will drive huge demand for minerals and metals that can be found right here in New South Wales. New South Wales has globally significant deposits for several critical minerals. And developing these deposits is an opportunity for regional economies to be able to export revenue and jobs. New South Wales has a distinct opportunity to become a global supplier and processor of critical and high-tech metals, and we need to act now to secure this opportunity for the future sustainability of the sector. Global market dynamics means more investors are seeking to diversify and secure their supply chains as demand for these minerals grow rapidly. This is where investment in New South Wales projects, minerals, and downstream industries are really important. The case for investment in the New South Wales speaks for itself. If you look at total mining production, it stands at around $22.1 billion. And with the export value of energy, mineral, and processed metal product reaching $21 billion in 2021. Now, this is roughly 44% of New South Wales merchandise export revenue. Despite continued challenges posed by the pandemic, 2021 proved to be profitable for the mining industry. Prices for most commodities continue to track upwards for the last half of 2020, with some like gold actually reaching new highs. This has, of course, flowed through to markets as seen in ABS exploration and capital spending growth around the country. And this is testament for the strength of our existing sector. But we see new opportunities afield for significant new growth in the New South Wales critical minerals and high-tech metals strategy. If I go back to November last year, I'd only just been appointed as the Minister, and the department had done a lot of work in relation to the New South Wales critical minerals and high-tech metals strategy. And we had the opportunity to launch this. And I encourage everyone, if you haven't seen it, to go and read this document. This is a strategic document that signals to investors, to the industry, and the broader market about the government's intention to grow the sector well into the future. And it sets out the unique and distinct opportunities that will make New South Wales a secure place to do business. Now, we have an incredible resource potential right here, especially around copper, zirconium, rare earths, cobalt, scandium, are complemented by world-class geoscientific data to drive new exploration. Now, our program of work for pre-competitive data over the coming years will have a special focus on critical minerals and high-tech metals, recognizing the opportunity for growth in this sector. We have a strong economic position, partially thanks to our once-in-a-generation investment in regional New South Wales. We have spent and committed unprecedented levels of funding in regional communities, where the vast majority of New South Wales exploration and mining activity is located. So it's these regional communities that are going to benefit from this. It's these regional communities that are going to get the economic activity from these investments and where we see mining into the future. It's these communities that are going to ensure that young people will be able to have highly paid, highly skilled jobs within those local communities. It is an exciting time in regional New South Wales. We've also got investments that have occurred through our $2 billion regional growth fund. We've got a 4.2 Snowy Hydro legacy fund, and it's already delivering real outcomes for our regions. Now, the new infrastructure that has been or is being built will support the existing mineral sector, as well as new projects in exploration and mining. New South Wales has strong ESG credentials, and we are one of Australia's leaders when it comes to driving new investment into renewable energy and technologies that will open up significant demand for critical minerals and metals. And we have a strong and robust regulatory framework, which is driving confidence to communities and investors that mining is undertaken safely and sustainably in New South Wales. We have a very proud mining history, and this has actually led to a mature and world-class minerals and met sector. Our established sector also means we have leading research and development, with New South Wales highlighted as an innovation destination in the latest innovation and productivity scorecard. As part of the critical minerals and high-tech metals strategy, we have committed to promoting exploration, activating downstream supply chains, and attracting investment. We're also concentrating our efforts in the Central West, recognizing that it's a natural hub for critical minerals development. By leveraging our existing investments, such as our $185 million investment in the Parkes Special Activation Precinct, the Central West Renewable Energy Zone, and other regional infrastructure investments, we can actually create a leading hub for critical minerals mining, processing, and manufacturing right here in regional New South Wales. But critical minerals and high-tech metals are also located in other parts of New South Wales, and we are also supporting development of these resources. Now, we've hit the ground running since the release of the strategy last year. I've recently announced New South Wales' first mine waste reuse project, which is also going to look at opportunities to find new sources of critical minerals in mine waste, such as tailings. We've also removed mineral allocation areas in the Central West and the far west of the state, which means more ground is available for exploration. We've also released a New South Wales mining investment register to promote investment-ready projects in New South Wales to global markets. And we've also dedicated a concierge service that works right across government to help unlock projects that are in the approvals pipeline. Today, it also gives me great pleasure to announce further investment to unlock the state's critical minerals potential. Now, as stepped out in the New South Wales Critical Minerals and High-Tech Metals Strategy, we will be rolling out a package of new geological surveys using cutting-edge technology to deliver an airborne gravity survey in the Cobar Basin, an airborne gravity survey in New England, an airborne electromagnetic survey in the Forbes-Dubbo region, seismic survey work between Cobar and Ivanhoe. The New South Wales government will contribute more than $4.5 million to fund the new surveys, working closely with Geoscience Australia to deliver the program. Now, these new surveys will build on the New South Wales government's recent work, including an electromagnetic survey in Mundy Money near Broken Hill and an electromagnetic survey in the Central West. We've received fantastic feedback already from industry about the quality of early survey work, with a number of companies using the information and the data to carry out licensed exploration programs. Now, these new surveys will increase our knowledge of resource potential across a greater area of the state and ultimately release data to industry to help spur on new investment and exploration activity. The new surveys form part of a $16 million commitment over 10 years to unlocking the potential of the state's natural resources and attracting investment. The suite of surveys being undertaken by the Geological Survey of New South Wales is ambitious, and it's the largest scale geophysical data acquisition in New South Wales history. It also demonstrates that New South Wales, the government, is actually backing the minerals exploration and mining sector. There's no doubt that now is the time to be investing in New South Wales critical minerals sector, right across the supply chain, right from exploration all the way through to end markets. And I said at the very start, and it was said even before I spoke, that we want to see New South Wales as the #1 state when it comes to investing in mining and advanced manufacturing. And the pathway that we have laid forward is creating exciting opportunities for that to occur. We've got a strong future right here in New South Wales for critical minerals investment. And the New South Wales government is intent to drive this opportunity for regional economies and communities. And we actually see that this is valuable, it's viable, and it's sustainable for a strong future for regional New South Wales and the mining sector. Thank you.
Thank you, Deputy Premier. And thank you very much for making your way through those masses out there. I think they read our program about doing things a bit ethically and looking after the environment. And good to see that you're actually looking at coming on board with the processing as well. How long till that sort of kicks into gear?
Well, we actually, this is an exciting thing because what we want to do is, even with our special activation precincts, what we're doing is creating hubs already so that we actually can get the minerals, we can process it within those areas. Some of those special activation precincts where we're going to see advanced manufacturing taking place have already started. There's one that's already opened at Parks, and that is out there in the Central West. We've got a Central West Renewable Energy Zone. So when you start looking at the raw product or the minerals that are being, that are coming out of the ground and actually manufacturing stuff right here in regional New South Wales, there is a lot of excitement. There is a lot of interest. I have to say, as the Minister now and the team as well, they're actually getting, a lot of requests, a lot of inquiries right now because New South Wales is seen as a very strong future for the mining and mineral sector. And I certainly want to make sure that, we leave a mark here that is going to ensure that that happens.
Thanks so much, Mr. Tooley. Appreciate it. Question without notice. Thank you. And I'm sure there'll be more outside as well. Brilliant. Interesting, isn't it? When we were talking lithium and European supply chain yesterday, and we're going to be talking today about America and uranium, I think, as well, and how people want to be able to process that resource right where they're using it in the manufacturing. It's good to see that Australia, New South Wales is looking into that too. All right. You will all remember the success that is Sirius Resources, yes? Okay, I like that, yes. Some with smiles on your faces, not me, unfortunately. Well, is this next explorer the spin-off that you've all been waiting for? S2 Resources. CEO Matthew Keane is joining us next on stage at RIU Sydney, and today focusing on the greater Fosterville project. And you might like to think of this little project as a lottery-winning site in terms of regional positioning, highest margin gold-only mine in Australia. It's a project that's changed the direction of their portfolio, which is already digging into other quality projects. Would you please welcome this gentleman, Mr. Matthew Keane. Thank you.
Thanks very much, Christina, and welcome everyone to day 3. Good to see there's still a good crowd amongst us. It's good to hear the Minister talk about New South Wales and development. We also have an early stage project in New South Wales, so we'd love to see those promises come to fruition. Okay, as said, S2 is the spin out of Sirius Resources. Sirius, the discoverer of the Nova Bollinger deposit, which led to a phenomenal $1.8 billion takeover from IGO Group back in 2014. What I'm going to present to you today is really just the opportunity. I'm going to be short and sharp. Look, I don't have many slides to go through, but you've heard some great stories, and what I want to convince you of is that S2 is amongst those investable names which you really should be part of the journey. Okay, look, we've got a pretty simple strategy. We're looking for company-making discoveries. We're not looking for a story that we can revamp and work over. We're not looking to redevelop an old mine. We're looking for an exploration discovery that's going to turn the fortunes of ourselves and our shareholders, a company maker, something akin to Nova Bollinger, which was discovered by this technical team. We've got a proven track record. It's not just Nova Bollinger. So you may or may not be aware, but Mark Bennett and his team, prior to my joining, also discovered in a former life the Thunderbox mine, which sits in Northern Star these days. Current portfolio, which I'll get to just in the next slide or two. We're right around the country as well as in Finland. We only operate in quality jurisdictions. So what we're looking for jurisdictions where basically ownership is secure, where the laws support mining, and where you can get land access. You know, we've got some great companies in Australia doing good work in Africa and the like, but we're looking for tier 1 jurisdictions, safe and secure, and able to do business and able to explore. We've got disciplined capital management. Look, that comes down to we maintain a strong cash balance. We've only raised equity 3 times since inception. But what we do put the money in the ground. So you've got to put money in the ground to find resources. You only find discoveries via the drill bit. So you've got to put the money there. Okay, I'm just quickly going to go through the team. So the handsome gent on your far left, that's the Mark Bennett, renowned geologist. Along with the 2 guys on the far right, you probably don't know, John Bartlett and Andy Thompson. That's the engine room of S2. So this is our core geological team. These are the guys who've been together 30 years. They've actually made 6 discoveries which have gone on to become mines, which that's an unprecedented track record for an individual team. Not all in S2 and Sirius, it's through a journey through a number of companies. The board is rounded out by Anna and Jeff in the center there, well-experienced executives across a number of companies with a high level of governance. And myself just far from the far left, right there. I won't give myself a rap at all. Okay, so I'm not going to talk to all our projects today, but what I will say, we're active in an operation sense on 6 projects currently throughout this calendar year. I'm going to touch on just 2 today, and that's our Greater Fosterville project, which we had the good fortune, as Christina pointed out, of gaining access to last year, and our Polar Bear project. Polar Bear project is the project which we're most active on at present, or will be this month. But I'm going to talk the jurisdictions very quickly, why we are, where we are, and why we're there. So like Meeka, we're in the Murchison goldfields, prolific goldfields. We've secured at Jillawarra. So I'll get my pointer right, excuse me. So we've secured via a joint venture, a 50-kilometre prospective greenstone belt with multiple workings ready for us to have a crack at, which we've already started. We're all aware of the Julimar discovery, which Chalice have made just north of Perth. We've got exposure to the Darling fault system for other, hopefully, lookalikes with multiple projects on our 100% our own right. That's West Murchison, where we've already had a sniff and proved we have fertile nickel and copper sulfides, as well as 3 Springs, but also via our investment in another junior called Todd River Resources, which we own just over 13% of. Over in New South Wales, we have Coonamberry. This is interesting. So this is one we're going to get granted hopefully this year. It's an analogy to the Fraser Range, and that's where Sirius made the discovery of the Nova Bollinger deposit. So it's a Cratton Edge, like for like. All the reasons we're here is the reasons why Mark and the team went into the Fraser Range back in the last decade. Okay, and finally, we've got a very extensive and strategic holding in northern Finland. So northern Finland, most people wouldn't be aware of, the Central Lapland Greenstone Belt. This is a real frontier for gold and base metals, but at the moment, multiple gold discoveries, active discoveries being made by majors and juniors alike. We've got probably one of the best strategic holdings in that province. Okay, so just on to Greater Fossil. So this is the value proposition, the main one in S2. Okay, so last year there was a tender process surrounding the Fosterville mine. The Fosterville mine is the highest margin gold-only mine in Australia. Produces 600,000 ounces per annum at roughly about $400,000 US, all in cost. So that's a colossal margin against a 1900 gold price. Over 7.5 million ounces. So how we got this, there was a tender process, anecdotally up to 30 companies were in the mix here, majors and juniors alike bidding for this block. The reason is it surrounds and abuts this mine. We were successful on merit due to ESG and the track record of the team, and also what willing to spend on this block. That's how we got hold of it. We've got the structures, excuse me. We've got the structures and the stratigraphy which host mineralization in Fosterville mine propagate into our block, which I'll show to you just in the next slide. We've got multiple drill-ready targets. So we're not sort of doing grass fields, working things up, which is frankly what we're used to doing. It's a bit of a different circumstance here. We've got the targets laid out for us. The work's been done by previous owners. The follow-up just hasn't been done. So that's our opportunity. Look, interesting, we committed in our tender process, through the tender process, a 10 million spend over 5 years. We know some bid a lot more in terms of their spend, which I think is testimony to the prospectivity. And to give you an idea, Kirkland Lake, now Agnico Eagle, they were willing to spend 90 million on the other 3 blocks on offer over the same period. So that's a 3-time expenditure on the blocks which are more distal to the mine than what we're willing to spend. I think that really echoes, how prospective this region is. So just bear with me. The next slide is an animation, and if it doesn't work, I apologise, but I will be able to talk to it. There might be a bit of an awkward pause. It's a bit slow to start, so bear with me. But just while that's coming up, just highlighting the blue here. So that's our tenure surrounding the Fosterville mine with the orange circle in the middle. I'll point out another feature. The light grey to the top, that's the Murray-Darling sediment basin. So this is now exploring undercover where a lot of our peers are. You'll see that our block is mostly in the outcropping region. Okay, so just zooming in a bit closer here. We're 20 kilometres as the crow flies from the city of Bendigo, a prolific or a historic mining town, gold mining town, really wealthy. You can see the money that's gone in there, some beautiful buildings. And again, we're encircling and encompassing the gold mine. I'm going to talk through what harbours the mineralisation here. So we're bound to the east by the Reedsdale Fault, not mineralised in its own right, but just coming up now, you'll see structures coming off to the northwest. So it's these lower order structures. They're the ones, these are the black lines, which host mineralisation in the mine. And just coming up now, you're going to see a corridor that sits off that. So there's a bit of a Goldilocks zone. It's called what we call the favourable gold corridor. It's about 2 to 5 kilometres off that Reedsdale Fault along those secondary structures. That's where most of the mineralisation is, and certainly the mineralisation that's within the mine itself. And just coming up now, you can see on our block, you can see north and south of the mine, multiple gold occurrences or prospects, and they're generally lying within that prospective zone. So we know where we're looking, we know where to go. Mineralisation does propagate from surface. So within the mining license, you can see there's a couple of yellow blibs there. They're encompassing open pits. To the north in our block, that northernmost yellow blob, that's a very large geochem anomaly where there is also a historic resource. So this is now spinning around 3 dimensions. The green here, these are the traces of the major fault zones. And I've been a bit cheeky. I've stolen a Kirkland Lake presentation, superimposed it on the faults. This is a long section of the mineralisation that is within the mine, just to paint some picture. So the lower zone there, that's the Fosterville mine zone. So to give you some context, from the Swan Zone to surface, that's 4 kilometres of contiguous mineralisation. So this is a huge plunging system. And the Swan Zone, which I'm going to zoom in on just a minute, that's really what changed the fortunes of this mine. So the discovery of this zone increased this mine's production 6-fold. So it went from 100,000 ounce producer to 600,000 producer, and you can see why. The current reserve is sitting at 2.3 million ounces, grading just under 50 grams per tonne, so almost 2 ounces per tonne. It really is a jewelry box. So stepping now to the north, and this is the Koori zone on a parallel structure, looks to be a similar repeat. There's a decline here and cross there from the mine. Mineralization looks to be increasing at depth, but just as you've seen in the other mine in the Fosterville, also free gold is starting to propagate. And this is really the kicker. So this is what I want to show you. So along the Goornong fault zone, we've got our Goornong South deposit. So 100% on our tenure. In the north there, if I can get, you can see there's the historic resource, which we won't quote because it's non-JORC. But just before the relinquishment of this license from Kirkland Lake, they drilled a number of fans of holes, you can see here, and proved that the mineralization you're seeing at surface is propagating at depth, and importantly, at the same plunge orientation as you're seeing, just via these arrows here, as you're seeing both in the Koori zone and also the Fosterville mine. So what we think, this is obviously one of our first targets. We think we may have a third or a fourth repeat within our block of mineralization you're seeing in the Fosterville mine. That's what I'm talking about, walk-up targets. But here's a sort of an interesting fact. So the Koori zone here, if you propagate that plunge extent at depth of where the mineralization is, so this is beyond where the mineralization is currently, that will, at the current orientation, poke its head into our mining license as well. So another great target there. But more than that, obviously there's repeated structures north and south of the mine within our tenure. So we've got multiple targets right along this 55-kilometre strike extent. I'll just sort of pan around just to finish off on that sort of schematic, just sort of highlighting, multiple gold deposits, so not gold deposits, gold occurrences within our ground. We've got a lot to get on with, and we've got drill-ready targets. There's just a couple of, sorry, I'll skip over this slide. This was a backup in case that animation didn't work, so luckily I didn't have to use this. Okay, so just to finish up, a couple of other key points. So there's been a lot of historic work done here. We've got up to $30 million of exploration expenditure to date. Ourselves, we've got access data, but the drilling hasn't been done. So target generation work has been done, not the drilling. Very limited drilling, has found some gold occurrences, but it's for us to follow up and really make a meal of this. Okay, I've run out of time here, so I'm going to skip forward very quickly and just talk about our Polar Bear project, where we're active this month. So what we're doing here, we've had this project, we've only explored so far 10% of this project. It's a live nickel system. You can see some of the grades are up to 5.8% nickel with copper and very strong PG credits. It's never seen EM, which is usually the starting point, the geophysical starting point of any nickel copper or nickel exploration. Due to the salt lake conditions, generic or standard EM is not easily applicable to this terrain. It's the brine which makes it hard to use. We've now got access to deep penetrating squid EM. So this has the power and what we think will actually be able to generate and hopefully light up some conductive targets at depth. So we've got a live system. We've only explored 10%. We're going to get on there and basically do the whole stratigraphy with this survey. And I'll just highlight that little rock at the bottom there. That's one of the highest grade PGE gossans in the country, grading up to 12 grams per tonne. I'll just leave on the final slide without talking just to our capital structure, but just to point out that S2 is a heavily institutionalized company in our register. So we've got 30% of our shareholders are financial institutions, and they are supportive of us, and they're backing this team to make a material discovery. So that's what we're after. We're looking for a company making discovery, and they're backing us. Hope you will too. Thank you very much, everyone. Enjoy the conference.
Back you Keane, and your jewellery box. Thank you very much, sir. Thank you for coming up and joining us. Aruma Resources Ltd. And next up on stage, stay for this one. Aruma is exploring a portfolio of strategically located lithium and gold projects in the fertile Norseman and Pilbara mining districts in WA. Now, Aruma's targeted exploration of its projects has attracted very strong investors. The company was recently awarded Gold Intersection of the Week for its 50.2 gram tonne gold intersection at its Salmon Gums project. Your eyes have lit up there. It's a good one. Aruma has a strong cash position. There is drilling ongoing across the portfolio, and driving it all is one of the most experienced and determined mining people to take the stage today. Would you please welcome MD Peter Schwab?
Thank you. I'd like to, first of all, thank Stewie and everybody for organising this. conference. I attend this every time I can. I'd have to agree with the Minister for the New South Wales government effort in promoting mining. Their MinView system is the best GIS mining information system in Australia. It is a really very simple thing to use, and the greatest thing is if you have problems, you ring them up and they help you. Never mind. So enough for the cynicism. So I'd also like to thank all of our great shareholders and backers and our bankers and stock advisors in Rawson Lewis for the strong support over the last 2 years, and thank you all for attending. So that is a picture of an old bloke on a pegmatite in a protected forest. As you can see, we use the word forest very loosely in Western Australia. Disclaimer, this has been done, this figure here has been done about 6 times in the last week with the share price going bouncy bounce. But basically, we're sitting around the 8 to 10 to 12. We've bounced around from 6 to 19.5. Got 157 million shares out. We've got a stable board. Paul, myself and Phil have been there since inception in 12 years ago. And Mark is a very good geologist. The important thing, we've got cash at 5 mil, enterprise value of 10, and we've got some very, very good projects. The result that we got in March from Salmon Gums, which is a greenfields exploration, pegged and cost us nothing except the cost of pegging it. We got 5 meters at 50.2 and the share price went down. So that shows you. So basically, why are we a good proposition? We've got a very good portfolio. We've got 4 projects. We had a project in New South Wales, but we've now concentrated in Western Australia. With COVID and our very strong premier, we couldn't get over here. But basically, we've found lithium rubidium in our Norseman lease at Mount Deans, and we've found very strong gold, proving that the Salmon Gums property can hold Norseman grade and style quartz veins. And we're about to be drilling up at Melrose, which is 5 k's north of Paulsons, and we'll go through all that. And all this drilling is going to be occurring very, very soon, like this month, next month. So where are we? Mount Deans, and you'll notice here I've got the Indigenous people. They are partners with Aruma. Very, very important. The major vow that we make at Aruma is never ever make the farmer or the landowner angry. That's the second rule, and the third rule. You do not want nasty people owning your land. So we've got the Naju people in Norseman. They're a great mob to deal with. Salmon Gums are farmers, and we're friendly with most of the farmers. Up at Pilbara, we've got the PKKP people. They've had some real problems with companies blowing their caves up. They're a bit touchy, but with all of these Aboriginal groups, they're overworked. They've got a whole lot of nasty lawyers coming in and taking their money as part of their deal, and which should be stopped, but it's not enough of the rent. And we got the Jitty people at Saltwater. So we've got 2 projects in the Yilgarn and 2 in the Pilbara. The indicative news flow, we've just had the Mount Deans Lithium Rubidium Cesium project. We've got an unusual zone there. We have not got the magical spodumene. We have got the lepidolite, but that's got its upside, and we were just discussing yesterday with people on off-takes for lepidolite. The Salmon Gums project is a beauty. We're going to be follow-up strike drilling at Mount Deans. Salmon Gum, we probably are drilling in about a week's time, and so long as it's not too boggy, it's wheat farm. Melrose, we've got the heritage survey starting on the 16th up in the Pilbara, and we'll be drilling there in June. So we'll start off with our project at Mount Deans. And this project is, it's a small lease. We had a lot of fun and games getting on there to drill it, but we drilled it. And we found we've got a probably a 1.5K long, 8 metre wide, 10 metre wide, up to 20 metre wide pegmatite with splays coming off it. And that's what it looks like. Very good drafting here done by yours truly. So what happens, you'll see there, we've got a partial hole down deep. We stopped that hole because it had a water ingress and it was salty water and we're in a state forest. So as soon as we hit the water, we stopped. But the upper hole, we've got the 1 metre at 1.14. But the combination of the lithium, rubidium and cesium makes it a worthwhile project to push on. So we'll be drilling there probably we'll wait for it to get nice and cold in July. Salmon Gums project. You have to look at this project. I got a telephone call in May 2020 from a chap who owns Norseman, Kevin Maloney, and he said, Swanee, have a look at our Panda Discovery, Pantoro Tulla's Panda Discovery. I had a look at that and I said, you beauty. That is a stratigraphic 4-zone deposit or prospect situated around the Scotia mine. And the takeaways here on this picture is this is Pantoro's image, but these shales are Peter Schwann's. And they are positions, they're not shears, they are shale bands. Western Mining at Hill 50, at Norseman used to call them the crosslinks. You can see that these are multiple zones. They are very, very good intersections. And Scotia is a high grade underground and they've just released a new ore reserve, which is pretty damn good. I think it's 800,000 ounces at 2.2 for open cut. That will definitely pay the bill. So how did we go about it? We pegged the land because it was vacant. The land, we followed the banded iron trend down the blue line. And this is quite an interesting geological area. This area here is the U and Me terrain that goes way back up to Yalgoo. And this blue line is the end of the Wiluna Norseman terrain. So we picked this area up. There's an old gold mine there, which produced a lot of ounces for the Morton family back in the 70s. So we dug up this. We found Tony Rivera's drilling here, 100 ppm arsenic. And then we dug around and we got the historic data from Panost back in 1997. And they have found these gold deposits or gold values. And we said, that'll do. So we've pushed on and the rest, as you know, we got this intersection from our November drilling. And that was the last 4 meters of the last hole before we stopped the rig. The rig was not a very hot rig, but it's like the last golf shot on your game. It's always a good one, makes you come back. Then we went back there in February and got a hot rig in there. And this is where we hit this magnificent intersection of the week for March. And the major takeaway here is that this proves that this country is a greenstone belt. It's got 4 or 5 zones of mineralization, but it is capable of having very, very high grade gold intersections. We move on, and why is it so? Well, these are the detailed mags, and you can all spot that when we were drilling our holes, we were too far to the west. We pegged the area knowing, prophesizing, hoping that it had 4 or 5 mineralized zones. It's got 3 or 4 that we know of. So it fitted the area. We got the right rock types, the right structure. And one of the greatest indicators of gold is gold. And as you can see, not very well, but if you come to booth 60, we'll be pleased to show you all this. But the big intersection is here, 224. Right, you say, it was 1 piece of gold in the tray. No, well, we repeated the assays and it came back at 139. So it's really good stuff. This is what it looks like on the surface. And you can see there's the old intersection, there's our new intersection, and this is what it looks like on the geochem, which was done in 1997. We picked up all the data. We were very lucky off an old geologist, Peter Robinson, and we bought the data off him. So we've got all the data, all the original data. So a very robust area to drill. And we will be drilling now. We will not drill anymore up here. We'll drill along the strike. And that's shown up here. And you can see there, you can see we've got the, I'm sorry, but that is the thistle trend, so named because the area was full of thistles. And this is the iris trend, so named because the farmer's wife is called Iris, and it's another flower. And what we've got an under-drilled area. We've got our 2 to 3 zones. We've got these nice little granite intrusions here. Very good, strong structure. 22 kilometres long, 1 kilometre wide. We've drilled 72 holes, and we've drilled probably half of them in the wrong spot. So watch this space. This is going to be a beauty. We now go to the Pilbara. We pegged the Pilbara once again in May in 2020, and because Hemi had just broken the news in January 2020, and we had a look up on the Malina structure. Sorry, the dance card was full. There was not a square inch to be pegged, and people wanted telephone numbers for payments for leases. So we came down here, and this is on the Nanjalgardi trend, and Nanjalgardi, for those that want to know, means paper bark. So, whoops. So it's a major trend, and it's in the south of the Pilbara, south of the Hamersley Basin, which is an area for huge hydrothermal iron ore, gold, copper, also got manganese. It's a great area, very fertile. And this Nanjalgardi fault has got the 1 million ounce plus Paulsons. It's got the electric dingo. And by the way, Northern Star have just dealt this to Black Cat Syndicate. It's got Mount Olympus, which is somewhere around about 2.5, growing very quickly. Kalamazoo are getting stuck into that. And we've got the Saltwater Project. You go further down here and you get onto Karlawinda, which is Capricorns. God knows what that is now, 2 million ounces. So it's a very fertile area. This is our Gossan Hill. It's a beauty. Paulson's, 1 million ounce mine just there, and you can see the quartz blow. We're 5 k's north, and why are we there? We are there, and I'm sorry about these figures if you can't read them, but the takeaway here is we've got alteration zones, 0.2, 0.3 grams per tonne, 20 to 30 metres wide. They're powerful. And what happened there is you've got the major splay, and we've all seen the splays in Matt's talk, and that's the size of Paulson's ore body, that little worm in the blow up here. They had a 50 ppb gold anomaly, big strong one, beauty, and they drilled all their holes to the west, and they got these. We know that this runs east-west. We're going to be drilling from the south. We're getting that cleared by the PKKP people next week, and we're off and drilling. So please come and see us, and we'd be pleased to talk about this. Now, we've got the cash. We've got $5 million. We've got the leases. We're not overstretching ourselves with too many leases. We've got the team. All of these projects are generated in-house. And we also, because we're testing my theory, we get 43% of our exploration spend back. So I'm just about to run out of time, and that means that we put the money in the ground and then we pull 43% of the money back out and spend it again. So for every dollar you invest, we spend it 1.5 times. So that's my presentation, and I'll finish, and thank you very much.
Schwann, thank you very much. If you want to know anything about mining over in Western Australia, go and have a chat with this guy after. He's a font of information. Tim Mason, come and join us, sir. Short but sweet introduction for yourself. You've got a big presentation. Tim is the CEO of Eagle Mountain Mining. Eagle Mountain Mining is on a very exciting journey to become a significant producer of low emission copper in a tier 1 jurisdiction of Arizona. And would you please welcome Tim as he enlightens us on this story.
No worries. Thanks very much, Christina. All right, I'm here today to tell you about our Oracle Ridge project in Arizona, where we are targeting green copper production. It's a tier 1 jurisdiction, Arizona. Now, when I say green copper production, obviously lots of people are talking about, well, copper, we need that for decarbonisation, but we're focusing on mining copper in a very low emission process. So quite different. Obviously, we're going to need copper, but low emissions. Important disclaimers. So our Oracle Ridge project in Arizona, it's got an existing resource, which has been recently increased by just under 40%, and it's growing. That's our aim. We want to build up a critical mass of resource to underpin our resources. This project was last mined in the mid-90s at a pretty modest sort of rate, sort of about 200,000 tonnes. We want to be mining at an order of magnitude greater than that. But in order to do that, we need to build our resources, and that's what we're currently really focusing on as we speak. And we've been getting some great results. We're currently refurbishing the existing underground mine where there's 18 kilometres of development to drill from underground. This will be an absolute game changer because the drill lengths are far, far shorter to build up our indicated and measured resources. As I said, 18 kilometres of existing underground development. This project had its key permits granted back in 2012 to 2015, and we will need to update those key permits. Drilling's ongoing. We've got $16 million in cash at the end of the last quarter. It was just a bit more than that, but just under 17. Charlie Bass is on our board, very highly regarded, very well known in the mining industry for his great successes, has that ability to pick and manage great companies and build them up. And we're very, very well leveraged to rising copper prices due to our tons and grade curve, which I'll explain. So our current resource sits at 17 million tonnes at just under 1.5% copper, 17 grams per tonne silver, and 0.17 grams per tonne gold. Some of the recent drilling results outside that resource, just over a week ago, we put out 55 metres at 2.16% copper and 0.5 gram per tonne gold. So that's a cracking intercept. It was down from a couple of 100 metres, but we're located on a hill, so it's effectively at sort of ground level, and I'll explain why in a moment. There's another great result outside the resource, 30 metres at 2.5% copper. So absolutely incredible. I feel for the previous presenters who say when you get these great drill hits, and sometimes you go down in price, but c'est la vie, we move on. But these are absolutely superb hits, and we're very excited by the results that we've been getting. We're doing our preparations for underground drilling, and with these latest results, we've brought forward the timing of our next JORC update. We're previously going to do it in Q4. We've brought that forward to Q3, and it's going to have double the number of holes we're planning on than our last update, which increased us by just under 40%. So we're located in Arizona in the Laramide Arc. Now, the Laramide Arc is a belt that runs from down in New Mexico, down south here, all the way up in through to Nevada, and that's got these major projects. Now, we've got the same formations, the same Laramide age rocks as a lot of these other major projects. Charlie Bass started working at the Freeport Mission Twin Buttes down south here, and they start mining these skarns. And we've got a skarn resource like many of these other projects. Then they go on and they find the big system. We've got a great skarn resource there. It's quite sizable, and no one's been looking for that big system that we know of. So whilst there's a big feeder there somewhere, we're trying to work out where that could possibly be. Right now, we're focused on building out our skarn resources, which are already quite sizable, and we're getting some great results. Arizona has all the mining services that you'd expect on the Fraser Institute. It's ranked number 2. Western Australia's number 4. So, it's certainly a great place to be doing business. You want safe jurisdictions with big projects. Here's an elongated view of the mine. Excuse the fonts have gone to something, but we're drilling up there with 2 rigs at the moment. You can see there's 2 portals that sit here. The tailings dam is down in the foreground down there, and you can see nice road access getting up as well. When I said low emission mining, the reason is we're located on top of a hill. We've got 2 portals that go into the side of the hill, and then the development goes up from there. So quite a unique situation. But why is that so good? This is good because that means it's really ideal for battery electric equipment. The battery trucks can't go up long decline haulages as it currently stands. The energy density in those trucks, it just doesn't work just yet. But if you're driving trucks on the flat, they work really nicely. And that's where they were designed for, you know, projects like Kid Creek in Canada. But if you actually got loaded trucks going downhill, they generate more power than what it takes to go up. Now, one of your biggest costs and emissions on a mine is both from your equipment. So if you can get rid of your diesel equipment, that's a huge benefit. But then also your ventilation is vastly improved if you don't need to be generating as much diesel emissions underground. So this is a great benefit and will be a really key focus for us moving into our feasibility studies. We're very focused on being part of the local community. There were some fires around our project and the fire departments did an absolutely superb job. These guys are absolute heroes in our minds. I'm very proud that we could play a small part in trying to help out the local community with fighting some of these recent fires. We support them and along with a number of other local groups in the area. With copper prices, you know, where they are and even where they're forecast to go by many analysts, I think we're in a great position. At a 1% copper cutoff, so not a copper equivalent, it's just straight copper cutoff, which is what we reported our last resource at, 250,000 tonnes of copper in resource. But if we change the cutoff grade from 1% down to 0.8, there's a 53% increase in the tonnes, 32% increase in the contained copper. So that's quite significant. There's a halo around the existing resource of some slightly lower grade mineralization. So as copper prices change, this is a this is a great benefit and provides a lot of optionality at higher copper prices. We've expanded the resource, we're getting results and it's growing. So this orange section through there, that's the existing resource. You can see this is the development that comes in. There's a portal here, there's a portal there. There's the declines come in, declines are more like inclines coming in there. I just used to always saying declines. And then it goes down here. We're getting a lot of the results in this southern area. Now this grey line through there is the extent of a mag anomaly. We get a lot of magnetite and come by the booth, you can see some great magnetite that we get. And it's been a great signature and tool for finding more mineralization. So it's been, oh, like I wouldn't say it's easy, but it's been a really good tool for us. And you can see there's plenty of grey area in through here, plenty of area. We've just really got to get more holes into it. And we've had a great strike rate from our drilling. You know, 80–90% of our holes outside the resource have been hitting mineralization. It's been absolutely superb. There's one of the drill rigs. Yes, the terrain can be certainly a bit steep and we've put the roads in, but that's been done. We've spent a bit of money to get those roads and those pads in the right location, and that's been set up for us now. So we're in and we're drilling. We've got the third rigs planned, or the underground rig is planning to get in Q3 this year once the underground's up and going. So some of these drill results, apologies, it is a little bit hard to see, but I'll read you some of the numbers that we've had out there. 63 metres at 1.8, 38 metres at 2%, 20 metres at 2, 53 at 2.6, 21 at 3.2. And then we do get these nice higher grade zones because a lot of the mineralization is chalcocite, chalcopyrite and bornite. So you do get some nice zones going up in the 10 and 15% copper as well, which we put out in our last announcement. So the recommissioning of the mine, we're so beneficial to have this in place. To put this development in place today would cost you in the order of about $100 million. So back in 2012, 2013, 2014, the previous operators did a drilling program from underground and they put a lot of this infrastructure in place. So there's gensets, there's a lot of the infrastructure is already in place. So it's not gensets, we need to get a genset. There's a lot of the other electrical equipment is in there. So we're doing the geotech inspections. These photos were taken just 2 weeks ago when I was on site. And a lot of the resource or a lot of the mineralization goes through the resource. So you can see here, you know, it's oxidized on the surface, but behind that, much of our mineralization is sulfides, which is great. And this is chalcopyrite that you can see being turned over in the middle. And on the right-hand side, there's chalcopyrite, and that blue is bornite. So bornite is a copper mineral. Those don't know, it sort of goes in the high 60% copper range. The development's in great condition. It's limestone, which is acid neutralizing. So it means that the bolts haven't rusted and things have been generally preserved. So this development, whilst it was put in back in the mid-90s. This was taken just 2 weeks ago. You can see the surfaces are there, and a lot of it's mineralized. It is marbleized as well because it's been heated up as the fluids have come through too. So the ground conditions are absolutely superb. This is a great asset for being able to restart our operations quite rapidly. So the key area we're focusing on at the moment, that's the existing resource, and you can see some of the results that we're getting down there. But like a lot of the other projects in Arizona, you get other mineralization in the area. So we have been looking out and around, and we've discovered this yellow squiggly line down here, which is a lower contact of between an intrusion coming through, outcropping mineralization for about 4 kilometers. So we're like, that is pretty interesting. So we flew the drone over with the mag on it, and there's a big mag anomaly dipping back in the mountain for about 3 kilometers. So this is a very high priority target for us. We require permits to drill on this particular piece of land. As soon as we get those permits, we'll be rolling a rig in there. We think this has the ability to be an absolute catalyst to changing our company, given what we see there. So I want to see a little bit. This is what a bit of it looks like. There is a bunch of old mines. There's like 6 of these little old workings through there. Would be mined back in the 1940s, and they just took out the 10 to 15% copper sort of areas. But you can see it on the surface for a long way. So when it was mined back in the mid-90s granted pretty sort of modest rate, they produced a bulk copper, silver, gold concentrate, good recoveries, nice simple process, not trying to do split cons or anything like that. And there was no penalties as well. So the smelters like it, and they like the limestone in there as well. So that processing plant's gone, so we would need to put a new processing plant in. From a permitting basis, the operators or the incumbents back in 2012 to 15 got the key permits for being able to restart the mining. That was an aquifer protection permit, which is your approval for your tailings, and then an air quality permit. We still have the air quality permit. The permits will need to be updated because we're envisaging a much larger operation than what was previously contemplated, and we're working on what those requirements are right now. A development timeline, we're going to keep on drilling, keep on expanding, keep on upgrading the resource. We're starting off the met test work now, and then we will be moving into sort of more full-blown pre-fees later this year and early into next year as well. The next JORC update, like I said, is being brought forward through to Q3 this year. So that's our strategy to build up that critical mass of mineralization to support our feasibility studies. From a corporate perspective, tightly held, 260 million shares on issue still. Charlie Bass has around about 1/3 of that still. Most of the institutions are Sydney-based, market capitalisation of just $90 million at the moment. So why invest in us? What's the value proposition? We want to become a green producer of copper, and that copper will be used for decarbonisation. So it's a great story on that front. We've got great assets. We've got an underground mine with a great resource, and it's growing. So we're getting results. We've got 2 rigs. We're transitioning into underground, and we tick a lot of the elements from both an ESG, from a permitting perspective, and the ability to rapidly restart this project. We're located just over straight through on that backside over there. So come and see us at the booth. We've got some great rock samples. So the geos in the room there, you can see some of the great mineralization, some of the bornite, some of the great chalcopyrite samples at the booth. Thanks very much for your time.
Tim Mason, thank you very much for your time. You can pop out the front there and take that last bit of the presentation and show those happy people downstairs if they can read what you've got at the front there about being green. Talking about being green, we're moving into clean base load power source for the future next. And again, we're going to dispatch from our next presenter downstairs to keep you informed about what we're doing up here. The US has the world's biggest nuclear reactor fleet, is how they would describe it. Now, first explorer of uranium, Okapi, is firmly focused on tapping into that need for a security of supply, which we talked about yesterday with some of the other minerals. To tell us more, Managing Director Andrew Ferrier joins us on stage. Please make him very welcome today.
Thank you for the introduction. Obviously appreciate the opportunity to speak at the conference, and I haven't met all of you at the booth yet, we're at booth 78. So you'll get a small sort of introduction to what Okapi is now. But if you want to find out more, please come past afterwards. But fundamentally, Okapi is a uranium company in North America. That's a disclaimer. We have a uranium company in North America. We have a very clear strategy on what we want to do. I've been involved in the company for the last 4 to 5 months. And since then, we've built out the portfolio. We now have 4 uranium assets in North America, 3 of them in the US. We also have 6 different projects in the Athabasca Basin. It's been an extremely busy time for us, and we're extremely well set up to benefit dramatically from the dynamics in the US uranium industry. Our portfolio of assets are diverse. We already have a 50 million pound resource at our Tallahassee project in Colorado. That recently increased by 22 million pounds when we announced the acquisition of a 51% of that Hanson deposit. We did that in an extremely well-structured deal to limit dilution for us up front, but allow us to get our hands on the asset. Our strategy is clear. My background is in mining private equity. I spent 7 to 8 years living in North America where I was focused in the uranium industry. I took the Reno Creek asset along with the team from pre-scoping study, pre-resource stage, all the way through permitting, through to a full NRC license since we sold that project to UEC back in 2018, which has gone on to be a great asset and stepping stone into Wyoming for those guys. But we have a clear strategy. I've done this in the past. We know exactly what assets do and don't work in the uranium industry, along with all the other industries. A lot of these assets have been recycled. We know from a permitting perspective what works. We're industry experts at ISR, in situ recovery, and that's what we're pushing for. We'll also do exploration. We're setting ourselves up to be able to explore on 4 of our projects over the next 12 months. We've already got permits in Athabasca. We've got our permits in Utah. So we know how to work with regulators. We know how to work with all stakeholders, which is very beneficial. We've grown the team dramatically since I've joined, brought on a new chairman, Brian Hill. He's based in Denver, which is very handy because it's close to the assets. He's a US citizen, lived in Australia for a long time. He was with Newmont. He was the CEO of Newmont for a period of time. So very highly respected, very highly experienced mining executive that I've worked with and we know well. We also brought on some of the ISR team from Reno Creek. Jim Villeneuve is now working with us as a consultant. We brought on Alan Roberts, who's spent 30 years in the US space on drill programs. So we've got that expertise and we'll continue to build that out as we move forward. This is our corporate structure. I think the key things here to understand is, 1, it's very tight, only 170 million shares outstanding. It's a lot of insiders own the stock, which is helpful. And it hasn't been a particularly marketed stock at this point. I've recently joined, been very focused on the assets and setting the strategy to help us deliver returns for shareholders over the coming years. That will change in the next couple of months as we look to get the word out there and tell everyone what we plan on doing. The other important thing is we just completed our OTC listing, which I think is going to be very important for us with a US story, getting that story out to the US retail market. I think it will resonate extremely well with them. And I think that's going to be an important part of our liquidity going forward. This is a map of our assets, which paints a pretty clear picture of what we're trying to do. The Tallahassee project, which is the one where we have a resource of close to 50 million pounds, is based in Colorado. It's about 140 Ks southwest of Denver. It's in a city called Canyon City. It's a very historical mining district. A huge amount of work has gone into the Tallahassee project, which I'll show over 350,000 meters of drilling. The sunk capital that's gone into the asset. If you tried to do that again today, you'd be spending a huge amount of money. We also have our Rattler project, which is in Utah and the La Salle district, which has been historically a very important uranium district in the US, has helped feed the White Mesa Mill, which Energy Fuels own. We also picked up our Maybell project, which is in the northwest of Colorado. We're very, very grateful and very swift to pick up those claims, which we effectively staked. It's a historic mining district, produced historically twice in the past. It was a heap leach project, which was attractive to us because that means it's potentially amenable to being ISR. And we've just in the process of quite a lot of historical data on the project, and the process of just systematically going through that data to better understand the projects and what the next steps are. And then we have our Athabasca projects, which I touched on. We acquired these in February. did a very detailed due diligence process to understand exactly what we got and what we can do with them very forward. I was very focused on making sure we were picking up the right exploration properties, not just picking up properties in the Athabasca so we can say we're in the right postcode. So we have a clear strategy on what to do there. We're planning on probably getting out to 4 or 5 of those different projects in the summer field season, North American summer field season, so June, July, and look to be drilling on 2 of them in the winter. So call that January, February, March next year. This is a pretty key slide in terms of understanding our valuation proposition. I think the uranium sector has been in a reasonably good space over the last 6 to 9 months. The interest has picked up. That's been driven by a few factors. One, 10 years of fundamental underinvestment into the sector. There's obviously a pretty severe supply deficit on the cards as we speak. There's been no real new discoveries in the uranium space for a fair period of time. Obviously, there's been a few interesting discoveries in Athabasca, but you know, what's happening in the US now, I think is pretty profound. But look, we've got a 50 million pound resource and we've got a market cap of $32 million. And I think if you compare that to some of our peers, which do have more developed assets, but we are fundamentally undervalued on that peer comparison basis. And I take that to be just because we're a relatively new, unheard story, and we need to get out there and tell people what we have, and probably more importantly, what we're going to do to create value out of these assets going forward. US uranium industry, nuclear energy isn't spoken about that much here in Australia, but the very simple story is the US has the world's largest nuclear reactor fleet, has 92 reactors. That accounts for 20% of all its energy demand. And that 20% has been pretty fixed for the last 20, 30 years. But what's happened is effectively the US domestic uranium industry has basically fallen off a gradual decay over the last 20 years to the point now where there's actually no domestic production of uranium. And they have become reliant on importing 50% of their uranium from Uzbekistan and Russia. And obviously that was fine until about 4 months ago, when that got a whole lot more complicated for them. And they were very quick to come out and ban the importing of coal, oil and gas, but they deliberately didn't do it for uranium because the US utilities couldn't handle it, right? US utilities are beholden to bring in Russian uranium. And this, I think, is setting us up very nicely for very active policy coming out to incentivize US domestic production, right? You've got the world's biggest nuclear reactor fleet. They need to be able to source those pounds from places like Colorado, not like places like Uzbekistan. And I think the key thing to understand in the uranium market is just the price elasticity, right? So the cost of yellow cake, which is what the mines produce for a nuclear reactor, is a very small cost of the overall cost of producing electricity. And it only accounts for about 5 to 10% of that overall cost. So if the uranium price doubles, that doesn't double the electricity price at the end of the day. So the point is the US utilities can very much afford to pay an extra $5 to $10 a pound for US based production because there's very little impact on the final electricity price, right? So you don't need to push that on the consumer. You can actually, deal with that yourself. It's very different to coal. Coal price doubles, electricity prices go double. So we think we're basically setting ourselves up to benefit for this geopolitical insecurity which is happening in front of us today. And nuclear demand, China building reactors all the time, India building reactors all the time. You're seeing what's happening to Germany. That energy policy all, definitely seems to have lacked wisdom in hindsight. You've seen England come out and the UK come out recently and say they want to build a nuclear reactor one every year these days. You've also heard rumours in Japan about them looking to restart their reactors as well. So this is all setting us up for uranium to be a very interesting space to be over the coming years. This is our Tallahassee projects. This is in Colorado. These are the 50 million pound resource we had. The key points I want to get across here is this is a strategic size uranium resource in the US. Previously, when this ground was consolidated all by one party, you had nearly 90 million pounds. And in US terms, that is a big resource. The grades are good. Our grades in our current JORC compliant resource that we got out of 540 ppm. That stacks up very well in the US. It stacks up amazingly in relative to to some Australian and African projects. And we're in the process of consolidating this district now. We've already done two deals to pull this all together. There'll be more to come. And we're very much in talking with the regulators now about how we progress this asset going forward. But you look at all the historic mining. It's been fundamentally extremely well drilled out. I think there's been over 350,000 meters of drilling, right? So this resource exists, it's real. This was going to be a mine in 1980. Cyprus spent, I think, around $200 million here. And they were bringing literally gensets to site. They had permits in hand, ready to go, and the uranium price fell out in 1980 and they walked away. So this is a very interesting asset and one we'll be definitely sinking us teeth into going forward. This is a bit of a closer picture. And the key thing to understand is I think just the drill density at that Hanson deposit. So the Hanson deposit is obviously there to the south within that blue rectangle where we just acquired an option for our 51%. And look, we'll look to fill in those sort of missing pieces going forward. When I joined, they originally had the Taylor and Boyer deposits, which are to the north there. We had an existing JORC resource on them when I joined at 27 million pounds. We've already got that up to 50 million pounds. So it provides us with sort of optionality in what we want to do. Hanson is sandstone hosted. We think it's potentially amenable to ISR. We'll go forward and do the work to confirm that. We'll do the hydrology, the permeability. We'll do that met test work in terms of the leaching to better understand that. There is a process involved to get permits. We're obviously got to go for the state and the county to achieve that. So we bring in sort of best in-house advice to help us through that process, but we're well set up to achieve it. And we hopefully to be working on this ground this year. Moving on to our Athabasca assets. These are the 6 projects we picked up. We acquired them from a company called ALX Resources, closed the deal in February this year. We did pretty detailed DD. The key assets projects we like is one is our Middle Lake projects, which you can see here on the left-hand side on the western edge of the Athabasca Basin. It's got all the neurology in the world that you'd want. It's 2 to 3 Ks from the old Clough Lake mine, which produced over 70 million pounds. It was an Aruma mine. So there's been some very interesting sniffs in terms of the drilling done there. The geological understanding of the basin has changed a fair bit over the last decade. All the existing Cameco assets were in the unconformity in the sandstone in the Athabasca Basin. Obviously, with the next-gen discoveries and the fission discoveries, they drilled through that unconformity into the basement rock. And there's lots of advantages to having a deposit in the basement rock relative to unconformity. And what they basically showed to the world was there are large, high-grade deposits in that basement rock. So when we're looking to pick up these projects, we were very clear we wanted them to be on the fringe of the basin, so we could actually drill into that basement rock with relatively shallow holes. So on most of our projects, we can get into that basement rock within the first 100 meters, which is pretty helpful given sort of the cost of drilling in the Athabasca Basin. You basically need to wait to the winter, so January, February, March to get out there. But we'll be very methodical and deliberate in what we do here to make sure we're driving value for our shareholders and we're drilling the highest target priorities. The last slide, and it's a little left field, but it's very important from a valuation perspective. We actually have a gold project here in New South Wales called the Enmore Gold Project. It's not far from Armidale in the New England region. The guys put 1,200 meters into this deposit last year, came back with 174 meters and 1.8 grams. It's not true widths. It was a bit down plunge into the mineralization, but whenever you got 174 meters at 1.8 grams, clearly shows there's a system here, a potentially pretty high grade system, got 30 meters at 3 grams. The last 3 meters when they pulled out the drill rig were at 8 meters, and that's still pretty shallow, right? So we're going to get back out here. We're going to do another 1,800 meters of diamond drilling, do some orientated core, really understand the orientation and the mineralization. Everything's lined up. As everyone here in New South Wales knows, it's been extremely wet here in New South Wales, so we just need to dry out a little bit. We've got the rig lined up, got the permit lined up, so we're very keen to do that. But long term, this asset doesn't belong in this company, so we'll look to be doing something with it once we just put a little bit more meat on the bones. So that's the last slide. I think the overarching proposition I'm putting out here is that we've got the right team. You want to be in the nuclear space, you want to be in the uranium space. And if you're going to do that, you want to be in the US. And we're working very hard on building out those assets and working our team. So thanks for listening to the story.
Thanks, Andrew. And take that presentation out the front there again as well. Dr. Will Goodall, would you like to join us on stage? Will is, he's actually holding up quite well this evening. Aura Energy, last seen out last night, enjoying a celebratory dinner. Things are going particularly well for them. It was a fiscally responsible dinner, I am told, to celebrate the good news in the company. So I'm sure we're about to hear more about that from this fellow here. Let me tell you about Aura. They're an Australian-based minerals company that is a major uranium and polymetallic project with large resources in Africa and also in Europe. The company is focused on resource expansion and uranium production at the Tiras project, which is a major greenfield uranium discovery in Mauritania. And they've announced a resources upgrade back in 2021, up 10%. Acting CEO Will Goodall, would you like to expand upon that, please, sir? Make him welcome, everyone.
Thank you very much. So, back to the presentation. Yeah, it's there hasn't been a lot to celebrate in uranium for the last 10 years, so it's we're allowed to go out and do some things. So it's a very exciting time to be in the uranium space, and we're pretty fortunate to have near-term development projects, and I'd love to tell you the story through it. So I'll move forward. So usual disclaimers. So Aura has three assets that we're doing. I'll talk mainly today about our flagship Tiras project, which is in Mauritania. It's a near-term development project. We've got a definitive feasibility study that we completed in 2019. And we've also got a project, vanadium uranium project in Sweden, which is a very, very large low-grade uranium and also vanadium project, and gold assets in Mauritania as well, which I'll run you through quickly at the end. So one of the key things with uranium at the moment is that the nuclear energy sector is very much under pressure in terms of supply. So there's been very little development in the uranium space over the last 10 years. So the opportunity to get into production quickly is definitely an upside. So we think we've got good near-term greenfields projects. Alternative jurisdictions, which I'll run you through as being very important, similar to what Andrew was just talking about in terms of where they're located and the geopolitical association, and sort of strategic projects getting through. So one of the real opportunities that we've got is for rapid growth. So the Tiras project is a fast-track uranium project. It's relatively small, and we've made that project that decision to be able to get into production quickly. The resource is quite large though, so we have an opportunity to expand it very rapidly. One of the advantages of having a smaller project is that we keep the capital very low. Capital of $75 million US. Operating costs are very low, and I'll take you through why that is. And it gives us an opportunity to grow into the rising market. There hasn't been a uranium mine developed properly in about 10 years, so it's something that we've got to take the utilities along the ride with us. So we want to be driving into the market as the price is rising, and then really hit our straps once that price is hit the incentive prices that our peers require to get into production. And obviously sustainability and ESG is a real focus with clean green energy, which is what nuclear is. So we've got a very simple strategy for development. We're currently kicking off development of the Tiras project. So we're moving into, I'll be getting bids from engineering companies tomorrow to get into feed engineering studies and rapidly move us towards a final investment decision by the end of the year. Then moving into our procurement and detailed engineering phases, focusing on a construction start and then first production in mid-2024. At the same time, we're doing work. We'll be sending out drill rigs in a couple of weeks in Mauritania to be looking at upgrading the measured and indicated resources within the Tiras resource, which will allow us to start doing the work to expand the project, targeting a larger project of 2, 3, 4, 5 million pounds per annum. So that will run in parallel with the view to once we hit production in the fast track project, we can start that expansion very rapidly. And then also we'll be continuing development on the Hagen vanadium project in Sweden. That's vanadium and sulfate of potash project. very strategic through Sweden and Europe. So I won't go too far into the nuclear energy and the uranium market, but nuclear is one of the new green energy things. To make the transition to decarbonisation, we need baseload energy. The greenest baseload energy is nuclear. It's zero emissions. So it's definitely going to be a part of the mix for our energy transition. At current sort of globally, there's about 10% of our energy is generated from nuclear. Even if that holds in terms of the transfer, the electrification of everything, there's got to be a lot of growth out of in that nuclear energy sector. So it's something that's going to be a very critical part of our life going forward, and especially in the US and Europe, it's going to make up a very important part of their energy balance. So there's been, as I mentioned at the start, there's been very little investment in uranium primary production, and that's lagged behind where the nuclear energy side of things is going. So we already see quite a significant supply deficit, and that's only going to get larger as more reactors come online, and the potential mines out there just don't catch up. So we'd be looking at coming into production in 2024, where we've got that supply gap is there, and then expanding our production to work into that area there. So this is something that we're continually going to see going forward. So the Tiris project, near-term project, it's a greenfield project in Mauritania. So for those of you who don't know where Mauritania is, it's not Mauritius. There's not many palm trees there. There is a lot of sand though. So Mauritania is Northwest Africa. It's basically Sahara Desert. It's a really great mining jurisdiction. It's a small country. There's only about 4 million people there, but it's got a lot of large mining operations. Kinross is there with a 20 million ounce Tasiast deposit, and it's got a long mining history. So the mining code's very good. The government's very supportive. And they're very dependent on extractive industries for their economy. So we get a lot of support in country for the project. Our project is in the northeast corner of Mauritania. There's not a lot of people around. We're about 650 kilometres from the closest town, which is an iron ore mining centre called Zourat. And it means that we can work on our own. But the project is quite simple. It's getting out there. So. The resource, so I won't focus too much on the resource, it's there. We've got a 56 million pound resource, 18 million pounds of vanadium that we added into the resource earlier this year. It's a superficial carnotite resource, which is very easy to access. So we think there's huge exploration. No one's done any exploration out here except us. There's huge opportunity to expand that resource going forward. I mentioned that it's at surface. The project is blessed to be a very simple mining operation and then processing operation. So mineralization starts at 10 centimeters. Basically, you take off the desert sand and you're down. It goes to between 4 and 6 meters deep. It's free digging, so you just have an excavator dig it up and put it in a truck. And it means that we have very low cost mining, very quick mining. The fleet to do a 1.25 million tonne per annum operation is one excavator and 4 trucks. So very, very simple. And we're blessed in the way that the carnotite is associated. So our strategy is essentially strip mining. We'll mine the material. We have a beneficiation circuit, which I'll take you through in a second, which sits at the mining face. It's a movable circuit. We scrub the material, screen it, the waste goes back into the mine directly. So very efficient operation from that perspective. Once again, it's a very simple flow sheet. We're very fortunate in the way the geology or mineralization has formed. The uranium and vanadium bearing mineral carnotite is very fine grained and it sits as a dusting on the weathered granite particles. So we dig those up, as I said, free digging. Put them into a scrubber. Essentially, that upgrades that we screen off the barren oversize, and we get a concentrate, which goes from the average grade is about 330 ppm uranium to we're feeding the process plant at about 1,500 ppm uranium. And that's only about 20% of the mass that we mine. So it's a very small processing plant, very simple to operate, and very similar flow sheet to what's used at Langer Heinrich. So well understood technology. So the project, as I said, low capital cost, low operating costs. So $25 a pound C1 cost, that will come down as we add vanadium in as a byproduct. We're finalising that test work at the moment. So all in sustaining cost under $30 a pound. We've kept the project quite small at the moment, but we will definitely push that into an expansion as we go through. All of these numbers are done using a $60 per pound uranium price, which is the current contracting price. Most the consensus is that the incentive price needed for a lot of the greenfields projects to get up and running is $80 a pound, and this project starts to look very, very good at $80 a pound. I mentioned vanadium, so we'll be doing the work to add a vanadium byproduct to this circuit. It's a very simple addition to the circuit. It means that we'll produce about 200,000 pounds per year of vanadium pentoxide flake for use in steel or in battery vanadium redox flow batteries. And that will essentially be a byproduct credit. It'll be between $2 and $3 a pound off our operating cost. So we've got a lot that's going on this year. This is our development schedule for this year. We'll be focusing on getting the project to an investable stage, so final investment decision, adding work on the vanadium to optimise the operating costs. A lot of work on the emissions and greenhouse gas emissions and using that as a way to optimise the project. And then also working on the expansion project. So we're aiming to get an upgrade to the resource by Q3 and then start working on adding to the reserves. We've done quite a lot of work in ESG and using that. We'll be having that as a key performance indicator for the engineers to make their decisions for optimization and value engineering based on reduction of our emissions. So it's very low emission anyway, given where it is. So we'll also be focusing on growing into that rising market. So I've mentioned expansion a few times, and we'll start looking at getting that expansion project going up to the project looks very, very good economically once you start hitting 3 million pounds per annum. So we'll be out there drilling in the next couple of weeks, undertaking a 10,000 metre drilling program. That'll be about 1,500 holes. It'll actually be the biggest drilling program we've ever done in Mauritania for the project. And that'll focus on upgrading the resource to over 50% measured and indicated resources, which will allow us to upgrade the reserves. We've also got a couple of theories around additional exploration that we'll be testing. So just quickly on our other projects. So we've got another project a gold project in Mauritania, the Tallahassee South project, which is quite an interesting gold project just to the south of the Tallahassee gold mine. This is a project that is early stage exploration, currently looking at opportunities to spin it out and give it its own balance sheet to really make it sing. But there's some definite opportunities there. Mauritania is a very, very prospective country. And finally, I'll just give it a bit of a teaser on the Hagen project. The Hagen project is a massive black shale project in Sweden. It's a very strategic project. It's we did a scoping study in 2019 to look at a vanadium and sulfate of potash project, which we're currently updating the capital prices for, and we'll start to look at releasing that in the next few months. The use of vanadium in vanadium redox flow batteries has expanded a lot in that time. It also produces a byproduct of sulfate of potash fertilizer, which in the European context at the moment is a very strategic asset. So just sort of in summary, the investment proposition for Aura is that we do have near-term uranium production. We'll be in production in 2024. Low capex and opex, which means it's easy to finance and easy to get into production, and then to start to grow that as we go through to become a genuine player in the uranium production space. Very quickly, Aura is listed on ASX and AIM. We're well funded. $11 million in cash, and we're definitely funded to get through to an investment decision. And just very quickly, we think we're quite undervalued. All our peers, we're sitting in a market cap of about $125 million. This is a selection of peers that think they're into close to near-term production. We think we're a bit closer, but we're definitely lagging behind. So there's lots of opportunity there. Thank you.
Thanks, Dr. Goodall and the Aura story. Go and have a chat with him afterwards. Our final presentation in this session comes from Black Cat, and we've got Mr. Gareth Solly coming to join us on stage. He's making his first public presentation since the company's transformational agreement to acquire the Paulsens and Coyote gold operations from Northern Star Resources. The company now has a 2 million ounce resource. They've started a 5-year journey to become a multi-operational 150,000 ounce producer, following in on those early steps to the likes of Northern Star and Evolution Mining. How are they planning to achieve that target? This guy will reveal it all. Would you please make him very welcome? Gareth Solly and Black Cat.
Thank you. Thanks, Chrissy, and I will attempt to explain that. Does this just fire up automatically, Shane? So I know we're running short on time, guys, so we'll jump straight into it, and I'll try not to keep you away from your morning tea. The company, here's a pro forma snapshot of where we'll be once we've finished the general meeting at the end of this month. So this gives you an idea of the capital structure. 213 million shares on market. We'll have in the order of $30 million, $35 million in the bank. The directors hold around 11.5% of the company. We've got some good big US resource funds in there as well, and Northern Star and Silver Lake both have a good chunk of the register. So this is on our website. You don't have to write everything all down. You can download it or come past the booth and grab a copy. Our directors, our board, Paul Chapman, finance, and Les Davis, mining. So founding directors of Silver Lake Resources. We've got Philip Crutchfield, legal. He's Zipco founding chairman. We've got Tony Polglaze. He's our mill guy in construction. And then myself, I'm a mining geologist. And I spent time at Daisy Milano in the early days of Silver Lake. So the acquisitions, what we're picking up, Coyote and Paulsens, picking these up from Northern Star. This gives us 3 projects now. So we've got our Calais project and these 2 new acquisitions. We're picking up 724,000 ounces at about 3.8 grams per tonne, so decent grade. 2 really well kept facilities, and strategically they're the only facilities in the areas that they exist. We're paying about $61 an ounce, which we think is quite fair, and I'll talk to that in a minute. We have a very good track record of being able to add resource to the acquisitions that we've made in the past, and I'm sure that's going to continue with these ones. So we've got a 5-year plan. I'll try and articulate that to sequentially start our operations and get all 3 up and running at the end of 5 years. So what we're paying, this is the consideration here, it's just under 45 million. It's cash up front. There's shares to Northern Star. There's another cash payment next year. And then there's milestone payments once we get into production. In terms of the comparison of what we're paying, that $61 an ounce to some other gold acquisitions recently, we think it's a pretty good valuation. If you look at a cost per ounce, or if you look at the grade that we're getting compared to most of the transactions, the fact that we're getting 724,000 ounces, it's high grade, and it comes with 2 processing facilities, 2 camps, and strategically located infrastructure. It's a bargain. So eventually we'll get a re-rate and people will recognise the value in the company, and I expect we should get some good uplift at that point. So here's an overview. Coyote's up in the Tanami, so a long strike from Cali over in the Northern Territory. We've got a good ground holding here, good 500,000 ounces in resource, high grade. We've got infrastructure, 300,000 tonne per annum facility. We've got the only camp in the area, the only milling facility in the area. Historically, it's produced an average of 35,000 ounces per annum for a period of 6 years before it was shut down. It's in care and maintenance. Paulsens, this is the asset that started Northern Star Resources, took them from a explorer through to a production company and gave them the leg up to where they are now. So good land holding here in the Ashburton. There's resource there. They've got a reserve there. It's on Northern Star's books. I can't talk about that. The 75,000 ounces per annum is what this has produced over a period of 12 years. So it's very consistent production from this particular mine. Again, it's on care and maintenance. It's ready to be restarted pretty much, but we were going to give that some drilling time. And then our Callies project is obviously at Kalgoorlie, just outside of town. We've got 1.3 million ounces there that we've built up in the last 4 years. We've got mills there. We're finishing our studies. It's pretty much ready to be developed when the time is right and when there's availability in the industry to do that. So in total, we've got installed milling capacity now. We've got decent high-grade resources, and we've got great land holding to keep discovering. So I'll talk to each quite quickly, and you know, come and see us at the booth if you'd like more information, obviously at the end. So Coyote's up in the Western Tanami is an image of the plant, 300,000 tonne per annum facility. It's got the administration, it's got stores, and it's stocked. It's got the camp. If you had to replace it, it'd be in excess of $60 million. There's good high grade here, and the jewel is the underground grade, 10.4 grams there at Coyote. So we'll get back into that. There's also about 400,000 tonnes of stockpiled ore. We have a plan here, a 5-year plan, and it starts with in a soft way, and that is to refurb the mill and then start processing those lower grade stockpiles. This is a long section now. So historically, Tanami Gold mined the dark grey areas here as an underground, and there was a small pit. The light grey areas are the remnant resource that's still here. And then obviously everything is open in our opinion, and ready for drilling and ready for growth. Our plan is in red. So we've got a 5-year plan. Starts with some stockpiles on surface. Then we get into an open pit. That'll take a couple of years to mine through. Put a new portal in. So brand new infrastructure, decline down into the Kavanagh lode, which was never touched historically. Mine that at a minimum width of 2.5 meters. That'll give you a head grade out of the underground of something like 7.5 grams. We'll break back into the old workings and we'll go and access that remnant material as well in time. That's not currently part of the 5-year plan. And of course, it's open for growth. So we'll be doing a lot of drilling here in the near term and growing this resource and building that plan up. Regionally, there's a lot going on. We've had Dr. John Hronsky give us some assistance here, and we're planning to do quite a bit of exploration in the area. Lots of good targets. We've got the big north west trans-Tanami structures. They run all the way through the Tanami belt. Where they intersect the right stratigraphy and where there's cross-cutting structures is where we're going to be targeting to find additional deposits. There's lots of other grade in the area that's been drilled historically. It needs follow-up, and so we plan to be the guys that do that. These numbers at Coyote, they're outside of resource, so they're the sorts of numbers that we expect to be hitting and following up on once we start drilling here, which we'll be doing as soon as we can. And then Pebbles, Bald Hill, Osprey, there are other targets in the area. So you can see there's lots of grade. Really, you know, this remote part of WA and Northern Territory has a lot of grade that's very prospective for big gold deposits and high grade gold deposits. Jumping over to Paulson. So again, the asset that started Northern Star, and they took this over and continued mining from where Intrepid left it. It's consistently mined 75,000 ounces per annum, and it's been left really well cared for. So the facility is well maintained. The underground is dewatered, ventilated. Again, be very expensive if you had to go and build this again. There's reserves in the underground. We'll convert them over to us in the long run, and we'll go and do a lot of drilling to obviously add resource. So again, there's a low capital restart, and it could happen quite quickly. But what we're going to do is give it some time, find the extensions, find the repeats, and from that point, we'll then restart this operation. So first cap off the rank is, you know, complete structural review. Look for where the offset is taking the ore body at depth. Certainly it looks like it's offset. There's repeat structures. You can see that in the geophysics. We'll be chasing those up. There's a lot of mineralization in the gabbro veins. that needs follow-up. It's not something that has ever been a focus for the previous miners. So there's a lot to do, and we will have an underground rig back in here next quarter at this point, and we'll be back into this. In terms of some of those seismic and the targets that are sitting there that haven't been tested, 3D seismic suggested that directly below Paulson's, along the same fault that controls where the mineralization is, there's another gabbro. It's the breaks in the gabbros that you're looking for. Well, that's what Paulson's is at the very least. So that's a structural trap. No holes in that, so we'll be going to target that. And there's several others in the area as well. There's a lot of regional opportunities that really hasn't been a focus for previous operators in the area. Again, we've had a review by John Hronsky. It's the big regional structures and displays off those. You're looking for trap sites, either rheological, structural sites that could host more gold. There's several other resources in the area: Belvedere, Mount Clement, Merlin. So we'll be looking at those, chasing those up and growing them, and looking at a lot of the other anomalisms. There's a lot of base metal and gold anomalism in the area. So lots of big regional targets to chase up. Again, lots of drill hits in at Paulson's itself that sit outside of existing resources. So good numbers, high grade underground deposits, and we plan to follow these up and obviously grow the resource. Back over to Cal East, we floated on this project back in 2018. We had 80 square kilometres, no resource. So we made a discovery fairly quickly. We've grown that through being very active. We've made some acquisitions, and for every ounce that we've acquired, we've actually added another 1.5 ounces through drilling. There's a lot more to do here. We think there's a lot of growth still in this area. We've picked up 2 mills last year. I think we talked about that here. And we've had them refurbed in BLA's yard there in Kalgoorlie. We're still finishing off a few studies. We want to get grid power out to site. With the cost of diesel at the moment, that's important. But right now, if you try and build a plant around Kalgoorlie, good luck. I mean, for us, we think the time's not right to do that. And so we've said we're going to pause that construction at this point. We still are looking at ways that we might be able to actually start mining though, because there is some capacity around town in some of the mills, and there's several mills around already. So we're looking at whether or not we can get an option to get some toll treatment done over the next 12 months. And that should bring cash flow in during 2023. So we're still going to be very active here. We're still growing resources. All of our resources are open and they need more drilling. Fingals, we've released some results a couple of weeks ago. Again, lots of high grade, showing trends and potential extensions away from the existing resource. So pretty exciting, and we'll be continuing that work as we pursue the other 2 new projects that we've got. Our ground holding is great. We have, control over the main structural features that are going to host and will locate where the gold is hosted. So, it's a great little project here outside of Kalgoorlie. Busy slide. I don't have to worry about it too much. There's a bit of a 3-year schedule, and I welcome you to come and grab a copy from this in the booth. And there's a bit of a 5-year plan. So, as I said, in 5 years, we'd like to have all 3 operations going. The first one to be turned on, we'd probably start some stockpile reprocessing at Coyote next year. We might be toll treating at MEI next year as well. But there's going to be a lot of drilling, which will lead to the conclusion of the study and a decision to mine at Coyote at the end of 23. That is to restart open pits. Paulson's, we're going to give it a couple of years of drilling, make some discoveries there, and then kick that in the guts. That could come all the way forward because, if we have good success early on, it's very quick to restart that. And then, we'll build Kalgoorlie. Hopefully it'll be cash flow out of the other 2, or it might come further forward depending on how things go. I'm on the last slide, Chrissy. So look, we've got 3 great projects in 3 top-notch areas in terms of gold exploration. We've got a strong board that have done this before. They've built other mining companies. We'll be drilling these high-grade deposits in the near term, and we should expect lots of news flow. So we've got 2 million ounces already, high grade, and I think it's going to grow very rapidly. So thank you very much, and please come and see us at the booth.
Thank you very much, Gareth. Now strong into our first session. Appreciate that. We are going to take, let's go for a 25-minute break. And when you hear me ring the bell, you will race back in here and sit down for our final 14, first of our final 14 presenters. Thank you.
Beautiful.